AZ Property and Casualty Practice Test. Welcome to the quiz. What is the pollution exclusion in a CGL policy intended to do? Is it A, exclude coverage for most gradual pollution events, with exceptions for sudden and accidental incidents? Or B, provide coverage for all pollution cleanup costs? C, exclude coverage only for intentional pollution? Or D, mandate pollution coverage? The answer is A. Modern CGL pollution exclusion broadly excludes BI/PD from actual/threatened discharge/release of pollutants in most situations, almost absolute. But some older forms or interpretations had sudden/accidental exceptions for abrupt events. It limits insurer exposure to unpredictable, high-cost pollution claims. Not full coverage, only intentional or mandate. Exclusion aims to exclude pollution liability except narrow cases. Next question. In commercial property insurance, what does the peak season endorsement provide for? Is it A, it temporarily increases business income limits during a business's high-revenue season? Or B, it increases property values during peak tourist season? C, it provides additional liability coverage during busy times? Or D, it lowers the deductible during a specified season? The answer is A. Some businesses, retail, tourism, agriculture, have predictable high inventory or high revenue periods. Standard business income limits might be inadequate during peaks. A peak season endorsement automatically boosts business income/extra expense limits and sometimes stock/property limits for a specified number of days each year during designated high seasons, then reverts. It does not increase property values. Not liability. Deductibles unchanged. The endorsement prevents underinsurance during predictable busy periods. Next question. In a property policy, what is an appraisal clause used for? Is it A, to determine the value of property at the start of the policy? Or B, to settle disputes between the insurer and insured over the amount of a loss? C, to appraise the risk before underwriting? Or D, to assess the premium? The answer is B. When insured and insured disagree on claim amount, value of damaged property or repair cost, appraisal clause allows each to hire an appraiser. If they disagree, umpires decide binding amount. It resolves value disputes without court. Not initial valuation, underwriting, or premium. Appraisal is fair, neutral way to settle loss amount disagreements. Next question. What is a retroactive date on a claims-made liability policy? Is it A, a date after which incidents must occur for coverage to apply under the policy? Or B, the date the policy was retroactively canceled? C, the date the policy was issued? Or D, the date a claim is reported? The answer is A. Claims-made policies cover claims first made during the policy period or extended reporting for wrongful acts that occurred after a specified retroactive date or retro date. Acts before the retro date are not covered, even if claimed during the policy. This limits the insurer's exposure to prior unknown risks. Not cancellation date. Not issuance date. Not report date. Retroactive date defines the earliest date of covered acts in claims-made coverage. Next question. What is a file and use rating law? Is it A, insurers must file rates with the state but can use them immediately? Or B, insurers must get prior approval from the state before using new rates? C, insurers do not have to file rates at all? Or D, a law about how to organize insurance files? The answer is A. In file and use states, insurers file new rates/forms with regulator, but implement immediately unless later disapproved. Faster than prior approval, wait for OK, or no file, no submission. Not file organization. File and use balances flexibility with oversight. Next question. Which of these is a standard exclusion in a personal auto policy, PP for liability coverage? Is it A, use of the auto for business purposes, with some exceptions, or B, use of the auto for personal errands? C, an accident caused by another driver borrowing the car? Or D, an accident occurring more than 100 miles from home? The answer is A. PAP is personal, so excludes business use to avoid commercial exposure. No liability coverage while vehicle used in business, except farming/ranching or private passenger/pickup/van exceptions. Personal errands covered. Permissive use by borrowers usually covered. Distance irrelevant. Business use exclusion keeps PP for non-commercial personal driving. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.